The following video is an extract from the Udemy course, Learn to Construct Financial Statements from the Ground Up. If you would like to purchase the full course, you can do so by using the link below. Hello and welcome back. In this lesson, we will be covering the trial balance. The trial balance is effectively the closing position and result of the double entry postings, which are the debits and credits contained in journals. I suppose the double entry debits and credits are contained within journals, which effectively make up the trial balance, and the trial balance is then used to construct the financial statements. To bring order to a trial balance, there are first general ledger accounts created so that a business can keep track, record and summarize transactions, so those financial statements can then be prepared. The general ledger accounts are segregated into the account categories of assets, liabilities, owner's equity, capital or shareholders' funds, which comprise the balance sheet, and then the last two there, the revenues and expenses, which are effectively the income statement. For example, a general ledger structure could take the form of a general ledger account could take the form of a 6-character code, and then that code then would have the information for that general ledger for any transactions journals coded to that specific general ledger account. So I think by way of examples, probably the best way to demonstrate this. So the first digit of that general ledger code could be allocated to one of those account categories, being the asset, liability, equity, revenue, or income. So as an example of that, a typical general ledger code might look something like this. So there could be a 6-digit code for each account. So first, before we get to that, the account categories could either be an asset, a liability, equity, income, or revenue. And then for each of these, then the first letter or the first number rather of that code could then denominate whether it is either an asset, liability, equity, or income. So for all assets would start with 1, liabilities would start with 2, equity start with 3, income start with 4, and expense would start with 5. And then the various accounts within each of those asset or account categories then would then fall off that naming, that numbering convention. So for assets here, 11 followed by 4 zeros would represent the account code for property, plant and equipment, and as we know, that is an asset. And then some different asset classes are here. We've just named the first 4, but there would also be others. So trade receivables is there. Bank, for example, would be another asset, or inventory would be another asset, so that would start with a 1. Then for liabilities, we'll begin with 2, so 2, 1 followed by 4 zeros then would be the general ledger account for trade payables. And then some examples are down here, so that same number convention would be the same for equity, income and expenses, and some indicative GL codes are here. So you'll recall we had journals in the last video. So just the first journal was the transaction impact in bank, and there's an injection from the owner of funds into the business. So the bank, an asset increased by 10,000, so that was debited by 10,000, and then there's a credit for capital in terms of the owner's equity that was being impacted by that transaction. So in terms of taking this a little bit further, this general ledger coding convention, the GL code for bank might be 15 followed by 4 zeros. So that would be the general ledger where this debit would be posted to. And so just one point to note is that companies, the accountants within companies would set up a chart of accounts specific for each individual company. So this would be agreed by the accountants within the company and communicated throughout the business. So in this case, we've just said, for example, bank might be 1500. So again, that wouldn't be the same across all businesses, obviously, but in this example is what we've gone with. In this example, then the other side of this transaction was capital. So in this case, capital starts with a 3, and in this case, we know that capital is 3-1 and followed by 4 zeros. So then that credit would then be posted to this capital account, and then that's one way accountants would keep track of these transactions represented in the journals. So just for the transaction 2, this was a double entry, so we debited inventory, and inventory is an asset, so we'd expect the account code to begin with 1 in this case, and inventory has the account code 16 followed by 4 zeros. So we haven't gone down that far in our list of indicative accounts, but that would be an illustration of that. And then trade payables is a liability, and we do have trade payables here, so then you would expect this credit to be coded to the account trade payables, which is 21 followed by 4 zeros. And then in the trial balance, it would just summarize the closing impact of all of the journals that have been posted to these GL accounts, and then it would be that closing balance that you would see in the trial balance. So again, I think an example is going to help you with this. So in the next code, in this next slide here, this is the example of a general ledger account. So the general ledger account would be revenue 41 followed by 4 zeros. So in revenue we had 41 followed by 4 zeros. So in terms of what we'd see in the trial balance, the closing amount we'd see is this 50,700. That is the net impact of all the journal entries impacting this GL code. So in a general ledger account, you would see the GL code would be numbered, the general ledger description, and then you would maybe set the date in terms of what you want to see the transactions for this period. So this period is from the 1st of January 2003 to the 31st of December 2004, so effectively for the full year for revenue. Okay, some other things we want to draw your attention to here. So within the GL account, we'd want to know what was the journal reference number that impacted this. So in this case, there was a credit of 6,700, and then that debit side, it might have been trade receivables or bank, but you would then go to the GL code for that relevant account then to see the debit side. So in this case, we just want to see the transactions that impacted revenue. So that's what we've got here. So that's the journal reference number. You might want to go to the general ledger to see further detail of a transaction. So it would make sense then to have some background information or description in terms of what is making up that transaction. So in this case, that it was 50 units sold of a certain product at a certain price. We've got that information there, and that was based on an invoice, and then you've got some information in terms of what the customer might be. We've got the debits and credits, and then the total impact here, and then some additional information might be who posted that journal. Suppose, if you wanted some further information that wasn't contained within the general ledger account, the person who posted that journal might be useful. So that's just in terms of coding up transactions and as a way of bookkeeping and keeping records of transactions. So journals are used to reflect the transactions, and then in terms of creating that information, general ledger accounts are used for backup information, and then the closing position of general ledger accounts effectively feed into this trial balance, which I'll show you an example of now. So just by way of a recap, really, debits and credits are the mechanism in accounting to record transactions within a business. In terms of the debits and credits, in terms of the various classifications, you recall that the impact of debits and credits on various types of accounts is set out here. General ledger accounts are used in bookkeeping to record debits and credits so that the impact of various sections of the accounts can be recorded, summarized, and categorized. The trial balance then is a list of closing balances of all the general ledger accounts at a period end. Due to double entry bookkeeping, in that every debit has an equal and opposite credit, the list of the general ledger accounts should always sum to nil. So I just want to show you an example of that. So we will get to that, but in terms of, I said before, the trial balance forms the foundations of the financial statements. So in this course, you will construct journals based on transactions. Based on those journals, you will reflect these journals in the trial balance, and then from that trial balance, you will then build the financial statements. So I did say I want to show you an illustration of a trial balance. So this is the end product effectively after all transactions have been posted in general ledger accounts, and then the sum of those general ledger accounts then would be reflected in a trial balance. So trial balance might look a typical trial balance could look like this. So typically you'd have that GL code. So you remember the revenue GL code was 41 followed by 4 zeros, and the closing balance of that GL account was 50,700. So you can see that there. So that closing balance is reflected then in the trial balance. We've got the GL description here in terms of that. For example, that one GL code is revenue, so the description will be here. That'll be useful for users of the trial balance. We have our closing balance amount based on all the end sum of all the transactions impacting that relevant GL code is set out here. And importantly, we said that all the debits and credits in the accounting equation sum to zero, sum to nil. So a trial balance should always come to nil. So that's an important check for accountants. If your trial balance isn't summed to nil, there's something has gone wrong somewhere, and you would need to go back through the process in terms of trying to identify where the journal hasn't, the debits haven't equaled the credits. So then, to take this a little bit further, I said that trial balances are used to create financial statements. So in terms of each of these trial balance codes, they would then be mapped to a certain balance sheet or a certain financial statement classification based on what that account is. So here, these accounts are all tangible assets, so non-current assets is set out here. So you'll show the balance sheet in a second to see how that maps to the balance sheet. Another balance sheet category is debtors. Another one is cash, inventory, etc. Then we've got our liabilities down here and capital, and then these accounts down here are all income statement GLs. So just to show you how this maps to financial statements, and again we're probably just showing you the end product. I mean, through this course you're going to build up how to actually build this trial balance, but just in terms of piecing this all together of what you're going to finally create, this is what the process will look like. So these are our balance sheet GL codes. So in terms of what the balance sheet, in terms of the color coding would look like, these all would get mapped to tangible assets. So these tangible assets are effectively non-current assets in which there is a physical substance. There are some assets, so for example brands or copyrights, for example, are assets that don't have a physical substance. So in this case, property, plant, equipment and motor vehicles, they are tangible, they have a physical substance, so they would be examples of tangible assets. So those would get mapped to the tangible asset code in the balance sheet, and if you sum those up, that will come to 2,700, and that gets mapped there. Debtors then is a 4,700, it would get mapped here and follow that process down in terms of the color coding. So again, you can see as an example here of how the trial balance is used to create financial statements. So these are balance sheet classifications in terms of these are balance sheet GL codes. We then have our revenue GL codes here, and then same process, these then get mapped to these relevant income statement items. So you can see here, hopefully you're getting the picture in terms of how journals are recorded in general ledger accounts, and then general ledger accounts form the trial balance, and then our trial balance then is ultimately forms the financial statements. So that is our income statement there. So finally, just to summarize, assets, liabilities, equity, and revenue are on expenses are recorded through debits and credits. So transactions, the impacts of transactions are recorded through debits and credits. Debits and credits are then recorded in journals. Those journals then make up the trial balance, and then those trial balance then effectively form the financial statements. So that is just an introduction to some accounting terminology in terms of debits and credits, trial balance, general ledger accounts. And so that's, suppose, in a high level way of how these comprise to form the financial statements. Now, throughout the remaining videos of this course now, we're going to actually getting into, you will then recognize and post the journals, which will form the trial balance. So you'll do that end-to-end process, and that's just, I suppose, a little bit of background in terms of what we're trying to get towards. So going ahead, if you want to go back and go through anything that we've just covered there, please feel free to do so. Other than that, I will see you in the next video. Thank you.